Hey everyone, welcome back. My name is Levi Woods. This is Drawbridge Finance. It is July 22nd. Having an awesome day here. My sign isn't on. I don't know, the battery died or something, but we're in it. The market is up. Well, my portfolio is up. The market's kind of flat. We're going to get into that right now. As always, not financial advice in any way, shape, or form, just what I'm looking at. And as usual, say hi in the chat. Right in YouTube, let me know if you've got any tickers you want me to look at. I've got a couple of paid subscription services open. We can do some analysis in those, which is fantastic. I like to welcome everybody on Tuesday. This is my favorite time because I get to just chat with everybody about any sort of ticker. We can look at the different markets and what I think might happen. And we can look at some of those other services and see what other things are going. Kevin is on board and he says he can hear me, which is fantastic. Thanks so much, Kevin, for always joining me. Let's get into what is going on in the market right now. We're going to start with the SPX, which is the S&P 500. I'm going to take a look at where we're trading right now, marking right now at just over 6,300. So do we forecast that we're going to be higher at the end of the year? I think that I would like to set a price target for the end of the year being around that 7,000 level. You know, that's where I think we could go. I know that's pretty lofty. I'm actually going to mark that rate on my chart here. So 7,000 right up here. I'm going to put a horizontal line there, and we're going to do that for the end of the year for January, for December 31st. I'm going to put a horizontal line here. Oops. I'll put a vertical line there. That's what I meant to do. And so what I'm doing is looking at where we might go from these levels. You know, are we going to continue upward? And I think that kind of trajectory would be right in line with where we've been. Now in the States, so you can see where I'm kind of getting this 7,000 prediction, because in the States, we're looking at a position where we could see decreased interest rates. And if that happens, then I think that there's going to be a lot more money flowing into the market. We you know, obviously with tariffs, we saw this massive drawdown this year, and we have now watched the recovery, this V-shaped recovery back to all-time highs. And I do believe this is going to continue to push forward. So I am holding long deltas. Now, does that mean in the short term we can't have another little pullback? No, it does not. So looking at the NASDAQ, you know, we could potentially see a pullback down about 10% down to this, the VWAP. And that is one of the reasons why I use this particular indicator on my strategies, you know, just to look at where we are. There is a lot of volume at these levels. If we look on the right-hand side, you can see this volume chart here, and in the short duration there was a ton of volume down here at 19,500, and then we saw quite a bit of volume at the 20,000 level and then at the 2,100 level as well. That means that right now, you know, there's considerable volume at this level as well. But if it does start to move, these moves will be relatively quick, especially to the downside. And whether or not we'll pause at these levels or continue down, I don't think we're going to go down to below 20,000, but I would not be surprised if we hit around that 20,000 level, just below that where the VWAP is. So those are my thoughts on NQ, and we could see that happening easily. Now in the Russell, different story altogether. The Russell is the NASDAQ 2000. And if we were to take a look at the drawdown that has occurred, you know, we obviously saw a massive drawdown for the same reason that we saw the NQ come down. I see Terry's joining, and Coach Zed is on from South Carolina. Welcome, everyone. And let me know if you have any particular tickers you want me to take a look at. Otherwise, I'm just going to continue through looking at these indexes, and we'll get into a couple stocks because there are earnings coming up this week as well. What is happening with Russell right now is we're seeing actually a bit of consolidation. So we saw a recovery, we got past the VWAP, and now we've been in a consolidation mode. If I was to, do I have IWM on this list? I do not. But we should look at this Russell, the RDTE. These are interesting stocks. This is a covered call strategy on the Russell, and you can see that it is a fairly new fund. It pays a weekly dividend, and if you were to look back from January, when we saw this drawdown, obviously this had a large drawdown. It hasn't had nearly as much recovery as the Russell itself, but these dividends more than make up for this. I think stocks like this, RDTE, are poised for some growth. There is so much potential upside on IWM, and I think that these dividends are going to continue to be juicy. So I am liking this as a very, very basic trade, just buy and hold strategy, buying at these lower levels and holding. I was gonna look at IWM and look at the volume, but I'm just gonna skip over that. VIX is sitting at 1660. This is kind of in that average range. It's not super low. It's not like in the 12 handle. What we're looking at is, close to the average price. So if volatility spikes above 20, if the VIX spikes above 20, obviously I'll be looking to sell strangles and things like that. But considering earnings is coming up, the market is rather complacent. US oil marking at $69 a barrel. And I've mentioned this a couple times, but I like to enter oil trades when the oil drops below 64. So if that's kind of the level that I'm looking for, I'll mark that line on there and we'll see. So there's that 64 level. And if it drops below this, we almost got there in June, but we haven't been there yet in July, and that's when I would like to enter a trade. And what I do is I usually put my break even around that 60 mark. So you can see why I do this, because oftentimes we trade outside of that range. Oil can move extremely quickly, as you can see. And when we get down into this level, that's where I like to play. Very easy to defend these if oil drops below $60, but oftentimes it trades in that range, that 64 to 60 range, which is where I like to play it. Gold continue its move to the upside. We talked about this last week. We are seeing this trend to the upside. We're not at all-time highs. That happened back in April. We're going to see what happens. We tested this level around the 34.36 per ounce. We did that twice. So we saw resistance in May, and then we saw resistance in June. And then are we going to see it again? We will see. Those other times when we look at what was going on, when we saw this resistance before, it was outside of the Bollinger. And now we played along the Bollinger. So we saw these higher highs going up, and then we hit that resistance again. We pulled back down, and we hit the support line. So very much trading in a channel. My expectation is that we could push through on this third touch, and we'll see an up move in gold. But lots of volume down here around that 2,900 level. So plenty of risk to the downside. Play smart out there. These futures can move extremely fast. Silver, here we go. All-time highs today, $39.22 an ounce. So pretty awesome move to the upside. Again, I am playing, if I'm playing this at all, which I don't have a position on, I am playing this to the downside. I am playing some of the junior silver positions, and I put those trades in my Discord. So if you guys are interested in seeing exactly what I'm playing, those alerts come out in Discord. I did do a silver play earlier today. You can sign up through patreon.com/drawbridgefinance. You can either join the free version, which gives you no alerts, but you can see some of the results that I post, and then you can choose to upgrade to your tier. Now, I'm going to be doing some changes to my tier coming very, very soon, so it would be very beneficial for you to lock into whatever tiers I'm offering now, because typically when I do these changes, I've done a few over the last couple of years, and when I've done a change, always people that sign up early are benefiting from being a member prior to the change. That's usually how it works. Unfortunately, we wish that things stayed static all the time, but they don't. So I try to offer as much value as I can, and we're doing a pretty major overhaul to the Patreon tiers coming up. So watch for that. Let's get into Apple stock up 0.6%. We have Apple's earnings coming up here very, very quickly. Earnings happening on the 31st. So today's the 22nd. That's just 9 days away. Big ones tomorrow, though. We've got Tesla and Google both reporting tomorrow. So Tesla, who knows? Are we going to see a big down move, big up move? I don't know how I would want to play these particular stocks. The expected move on Google is about $10. And Tesla, we would have to look at the option pricing to see that. I would love to know if you have any questions about any particular stocks, and then we can get into taking a look at some of those. And so if you type the ticker in the chat, I will be able to pull those up, and we'll look at investing.com as seeking alpha. Yeah, what else is going on? NVIDIA continues to trade outside of its range. MicroStrategy, some of these stocks, having a little bit of a pullback. We're seeing this move to the downside. Meta down 1.8% today, and again near the top of its channel. Hood continues to push up, having a little bit of a drawdown these last couple of days, but everything very, very overextended. From a price action point of view, Apple, I think that Apple's down because of the tariffs, right? It's very much an importer of products, so those tariffs can affect them quite a bit, whereas some of these other positions, not quite so much exposure to that. Adobe, which is like a software company, has been in a downtrend these last couple of years. Lots of competition in Adobe right now. Amazon continuing to have its move pushing higher. Again, when I'm playing these, I'm often looking at these ranges close to the VWAP. So whenever I'm playing positions, I'm looking at that VWAP very carefully and saying, okay, where might my profitable range be on any of these? Because they're not mean reverting, but oftentimes we see movements up to the extreme, and they pass through, touch off of, or move through these VWAP levels, and we can see how that functions quite well on almost any chart when we see how much. This one, Hood, obviously the chart, the standard deviation kind of expanding outside of that as it trades outside. But if we look at like Meta, these bands aren't crazy huge. These stocks all tend to trade inside of a range, and they trade around that VWAP very, very nicely. So our job is to play these and make consistent income in our portfolios so that we're able to beat the market. That's the big thing. Now, I was just reviewing some of the last couple of months, my model portfolio, where I just do straight up stock picks at the beginning of the month. So I have a list of stocks. Last month I did 25 stocks. Some of them get held over from month to month, but just to give you an idea, in May, when the S&P 500 was up 5.92%, my stock picks went up 8%. So I outperformed by almost 2% in a single month, which is massive. This was during that surge up. Typically, any type of stock picking like that, when we see the market go up, we expect to see a relatively similar return. This is like a high correlation type of thing. So in May, when the market was up almost 6%, I made 8%. That makes a lot of sense. Now in June, market was up 4.4%. My stock picks returned 9.46. So outperformed by 5%. That's a 7% extra return in just 2 months. In May, outperformed by 2%. In June, outperformed by 5%. And then in July, so far, it's like absolutely neck and neck. My 25 stocks that I picked are up exactly 1.75% as of today. And that's the same as the S&P 500 at 1.75%. So we will see who outperforms this month. But that's kind of the goal for me. I use a variety of software to hand select stocks based on data, and then I can put those out. My goal is always to just invest smarter and make more money over the long term. Now, it doesn't have to be huge returns. You guys know, if you've been following me for a long time, I target positions that can make like 40 to 100% per year, which is fantastic. And what I do with those positions is that I don't tend to manipulate them too much. They're very simplistic. So for those of you who've been following along in Discord, I have a Ameritrade on that has just been absolutely consistently returning close to 50% per year for 2 years straight on a relatively non-move. In fact, some of the stocks that I purchased, I'm actually down on the stocks, but I made so much on the covered calls that I have free shares. I literally have all of my initial investment back in less than 2 years, which is wild. That means I'm doubling my return every 2 years. It's crazy. doubling my money every 2 years. It's the power of knowing what to invest in. Now, if you're new to my channel and you haven't watched before, or you feel like you don't have time to do those kind of things, that's where there are options for newer traders. And I have made videos on this kind of recently. These are new products that just weren't available a couple of years ago. This is March of 2024. And you can see there's a bit of a downtrend in the overall price of this underlying, but the dividends are massive on this. This is a $35 stock, and this dividend weekly 23 cents. So if we look back at how much we're getting, 23 cents on that prior dividend, so the last 3 weeks, if you look at those, we basically made 24 cents times 23 cents on average over the last 4 weeks. Well, that's $1 return on a $35 investment. If imagine that you made $1 per month over the course of a year, well, your $36 invested today would return back $12 in cash. That's a 36% return just in dividend payout. All of that can be reinvested, and the compounding is massive when you're looking at a fund that is very, very simple, that is making around that 3% per month. You know, it far exceeds the expectation of the S&P 500's 10% per year. And there's tons of these out there. So if you're looking at them, you know, RDTE is another one. The stock right now is $34, and the dividend 26 cents, 26 cents, 26 cents, and 27 cents. So we're slightly higher. RDTE's payout is a little bit higher. So things to consider. Coach Zed said, any thoughts on Adobe? Seems like this is below fair value. Would you be a buyer here? Perhaps 350 cash secured puts. Thank you. Let's take a look at fair market value calculation. Now, I like to use investingpro.com. This is a paid service. I do have a discount link. You get a better deal if you use my discount link. So check out the description below to check that out. And what we're doing with this, one of the reasons I love it is because I can, at a glance, I can see what the current value is. Currently it's trading at 372. Fair market value, 484. So this is the calculated, you know, this quantitative analysis. We're seeing very, very bullish sentiment here from the AI research that is happening behind the scenes. So we've got management has been aggressively buying back shares. This typically drives up price, which is great. It's got a high shareholder yield, and 25 analysts have revised their earnings upwards for the upcoming period. And then impressive gross profit margins. So I love to look at this and just say, like, where are we? The growth health is good. You know, the profitability health is fantastic, and profitability is amazing. An amazing metric for any company. If you just think about investing in general, do you want to invest in a company that is profitable, or do you want to invest in a company that's not profitable? There can be lots of opportunity when a company that's not profitable turns into a profitable company. But from like a blue chip investing standpoint, investing in companies at a level where the expectation is that the profits are going to continue to come usually ends up with a longer term yield over the long term. So when I look at this, the way that I trade these, I often look at the fair market value and I say, okay, well, if the fair market value is 484, eventually we could get up there. That's 30% higher than here. So if I was considering a short put, I might actually consider an in the money short put. I might say, well, what if I agreed to buy the shares at 390? What does that look like? Let's take a look at another platform that I have here. Give me 1 second to make sure. I thought I had it pulled up here, but I'm just gonna pull this up for you guys, and we'll take a look at the potential here. I know you can't see this yet, but you will be able to very, very shortly. So I'm gonna look at, this is a company called ORATS. So you can see that here. I have no affiliate link for them, but the dashboard, the website is orats.com. It is a paid service. They what we can do is we can look at the chart, and I love these charts because one of the things we can see is all of the metrics on here. We can see these large buy orders. Remember, when we were investing pro, they talked about, management's been buying shares, aggressively buying shares. Well, we can actually see those orders right there. So these are not that big comparatively to other companies. This large green triangle here, and they are scaled to size, so we can see larger purchases. This is only $508,000 trade, which means these ones are going to be smaller. These trades, they're actually buying shares, and they're not paying anything for them. So these are like an options exercise that is happening in their account where they're being given shares. So these are very, very small purchases. Now, these same people may be selling those shares. So if we see Jefferson is given some shares and then he might sell some shares, that happens from time to time. That's how executives make money off of the shares they're given. Now, if we take a look at the where the expected move is, we can see out in time where we might be able to make some money. There's some unusual activity out here. Look at these calls up here, the 550 level in September. That's an interesting position, isn't it? So that's one of the things I like about ORATs is we can actually visually see where some of these trades are. Lots of calls above. So not a lot of action below. In this case, what I might do, if the fair market value, 550, man, that's just so out there, isn't it? So what I might look at if with this is say, well, what can I do? Where can I make some money in those longer durations? Let's go to September, which is 60 days away. Let's just look at how much that 550 is, where there's volume there. It's worth to buy. Price is about 26 cents right now, showing 50, sorry, I shouldn't have clicked on that, showing 26 cents to buy. And what that does is it gives me a very low probability trade. When we look at the distribution here, the distribution is likely that the stock is going to stay in that 450 range. Now, let's just zip back to investing. So 484 is fair value. And if we were to look at that, 484 is very much at the top of the scale. So I don't know if you guys can see this very well, but we've got this zone that looks like that with these bars, and it kind of shows us where the expectation is that we're going to make some money, or the stock is going to trade rather. So in this case, the probability of profit is very, very low because this position doesn't make any money if we go way out in time. Or even if the stock moves way up. But the thing is that there could be a relative price change with these. So it is something to consider. Maybe we just end up buying something that's cheaper. What about the 525? Or can we buy a really inexpensive spread with these? And that might be the way to go if we wanted to get a long position. So let's take a look at that. I'm going to clear this off, and we're going to, on that same duration, what if I was to buy the 500 and then sell the 520? Let's just see how much that costs. That's showing a debit of about 26 cents. And in that case, we have a similar sort of situation, very, very low probability trade. But if I was bullish on this, we can see the slope of this potential gain. This actually could make some money. Say the stock went up to that 464 level. Well, on this side, we can see right here, that could make 500 bucks. There's potential there of it moving up. How might I do this? If I wanted to go long, what I could do is I could sell an at the money. I could sell an at the money put. And what that does is it gives me a really, really bullish position. I now have a trade that has a 70% probability of profit. My distribution edge is excellent, 16%. My max gain is showing on this chart is $3,800. Max loss $11,000. So this is max gain in this range showing me at a 30% return. But what we can do with this is, because these are so cheap, these calls, we can actually buy a whack of them. Like, what if I was to buy 10? What does that look like? So now I'm still collecting a $1,500 credit for this. And now I have a massive potential profit. You know, I have $11,000 at risk, and I could triple that. I have a max gain of 21,000 if the stock was to go up to 516. And that's outside of where those calls are. I could also do this with a much lower strikes if I wanted. Playing these, say I did like just like a 460, and then I bought something lower, 450. Now I'm collecting $1,100, and this trade has a max gain of $11,000, a max loss of $11,000. So that's 1-to-1, and I can adjust this spread as I see fit. So maybe I do like the 480. And so now I'm only getting a $200 credit for this. I've got this $200 credit, but I have a maximum potential $30,000 on a risk of $12,000. These are very outlier moves, but if I wanted to get a bullish position, this is where I could really crank out some money. Say the stock today went up, just had a surge, went up to $427. Well, this trade would make almost $10,000 just today. So that is something that I like to consider when I'm considering my position sizing and saying, hey, I think that this stock may go up. Where can I make some money? Now, again, this is based on a couple of things. We're looking at the fair market value, 484, you know, and so this one would be exactly that. If the stock traded above 480, I would turn $12,000 into $40,000. That's 4 times the money if it was just to go up to fair market value. Let's look at that on the chart and see where that is. So let's pull up Adobe here. We're at 372. This is a large move, you know. Don't get me wrong. I'm not saying this for sure is going to happen, but if I was in the position where I thought that the stock might go, that 480 level is right there. It's right there. So if I was willing to take that risk and say, I'm going to, well, let's go back to that. Where are we here? I'm willing to buy these shares for 370, which is the current price right now. I would be able to collect the $200 credit and have a massive potential to the upside. Now, how can I adjust this? Let's go a little bit further. Let's look at, well, what if I didn't do quite so extreme? Which one are we looking at? Let's go to ORATs again. What if I just bump this down to 5 contracts? So go up here. We'll do 5 contracts on the spread, and then so we could increase the width of the spread, or we could do we could go a little bit wider. This still is a $20,000 trade. We could also consider putting in a buying a put on this. So price is 372. You know, how much does it cost to buy 310? Well, I could buy the 310. Oops, that's a sell. Let's make this positive here. If I bought the 310 put, and I'm going to adjust these back to 5. Now I have a defined loss of $5,000 and still a max gain of $15,000. And this range right here that we could stay in still gives me a credit of $750 over the next 60 days. From a return on capital standpoint, let's just calculate that out. So the max loss is $5,200, right? So that's what our total maximum risk is, $5,240. And this could collect a credit of $756, and it's a very nice credit to collect. So let's get our calculator out and calculate that out. $756 divided by $5,240. So that's 14% return on capital over the next 60 days. If we divide that by 60 days and then we times that by 365, now this will be an earnings play of some sort. You know, there's earnings here. It's 87% annualized return on, with the potential of making $15,000 on a $5,000 investment, tripling the money. And I don't think that's that far off. That hits that 4x return if the stock hits this green, trades above this green line on August 29th. No, what were we? September. That was the September contract, wasn't it? We were looking at the September 19th. So let's go to September 19th. We'll put a vertical in here. September 19th, right there. So that would mean as long as the stock traded up, there's getting to be a lot of lines on there. Stock traded up above that green line by that date, 4x. And earnings, you can see that earnings coming up in that time frame. So who knows, might be an excellent time to play something like that. If I was considering doing a short put, that it might work very, very, very well. Got some top fans here, which is awesome. AF is asking about Philip Morris. Let's take a look at Philip Morris and we'll look at its fair market value as well. We'll also pull it up in Seeking Alpha. So we're gonna do PM, which is Philip Morris. And the valuation is not great right now. We're having a bit of a down day. Profitability is an A+, momentum's A+, revisions A+, quant rating is a hold at 347, and up 50% or 56% over the 1 year. Year to date up 39%. Over the month, we're down 9.45%. So what happened here? Did we have earnings that we missed? I don't actually track Philip Morris. I've traded it a couple of times in the past, but it's definitely not one of the ones that I go to all the time. We had earnings in April 23rd. So, and we had a beat there. So there must have been something that came out that wasn't earnings related. Maybe AF, you can jump in on that and say, hey, this is what happened. Was there some news around Philip Morris in the last couple of days? Because if we look at the 5-day chart, stock was trading at 180. We dropped down to 163. Now let's go over and do the same sort of analysis with investing.com. We can see that fair market value at 152. So currently trading at 167. This is a downside percentage of 9% from the current level. We've got some bullish sentiment here, raised their dividend. Three analysts have revised their earnings. Impressive gross profit margins. We saw that on Seeking Alpha. They had an A+ profitability, but right now it's trading at a high earnings multiple. And we can see that reflected on both of these platforms, both Seeking Alpha and investing.com, both saying this is not a fair value. We shouldn't be going long these shares at this point. So this is where, when I'm looking at something like that, when I flip over to ORATs and I'm looking at a trade, if I pull up PM and we take a look at what it looks like, when I'm looking at the options chain, obviously I'm going to have the next earnings July 22nd, which is today. So 0 DTE, we've got this would be an earnings trade, and PM had earnings today. Okay, we already had it. Why is that's interesting? So why is it showing? Why is Seeking Alpha not showing? Why is it not showing? That bugs me. Like, announcement date. This is the latest quarter. If they were today, and it's showing estimated at 722, but it's like we're in the middle of the day. This should really be updated at this point in time. Okay, so this is an earnings drop, 7%. And we would expect that this means that we're trading closer to its fair market value because this is the newest information. So thank you very much for AF, Coach Z, both of you. Revenue came in 7% short from ZYN pouches. Right, so they're having a little bit of short momentum. This is again where I look at these platforms and I say, okay, where is that fair market value? How can we determine this? it makes me wonder if Seeking Alpha isn't updated. Is this updated for investing.com? Unfortunately, there's no historical on here. So I can't look back and see what it was showing fair market value yesterday. Seeking Alpha is kind of cool because it actually shows the rating based on what was going on in prior days. So we can see that it actually, the sentiment had changed here in the middle of July as we were leading up to these earnings. And then the rating got changed from a strong buy to actually a hold. And historically we can see that. And again, valuation this whole time has been a D or D minus. D plus here back on the 9th. But overall, you know, when we're purchasing shares and going long, we have to look at this valuation. And then Seeking Alpha lays this out very, very clearly. You know, limited growth, great profitability, great momentum, but this valuation being a massive, massive thing. Both valuation and profitability are the things that I lean towards when I think about whether or not I want to be long or short a stock. So in this case, where we had a low valuation, we can expect that investingpro.com was also doing the same thing, or investing.com Pro Edition was doing the same sort of thing and saying the fair value was lower. How do we play this though? We have less, let's go to the right screen here. We've got less IV now that earnings have come out. Typically then I look at a longer duration. How much money can we get? What if we were to sell the 155, which is close to that fair market value? I'm collecting a credit of $1.23. This trade has a 85% probability of profit. Now, max loss in this screen, it can be larger than this selling a short put, but in this screen, we're showing 2.46, a max gain of $123. I don't love that kind of thing, but maybe I think that this stock is going to stay in a range. Well, that's where I could build out an iron condor, and I could say, well, look, there's at the 180, there's some value here. What if I was to build a condor? So what I'm doing is I'm doing a credit spread on either side. So I'm selling the 155 on the top side. I'm selling a $10. So I would buy a $10 spread on the downside. That would give me, what I would look for in this is I'm typically looking for 1/3 the width of the strikes. This is not a huge credit, $190 on a $10 spread. It's not fantastic at all, but there's also a probability of profit of 73% if we look at that. So I can take more risk and I can potentially make a little more money, or I can have a wider condor on, and I might want to play that. Look at this distribution edge. You know, distribution edge 7%, forecast edge 5.3%, and it's constantly updating. That's why it's flashing like that. It's updating in the background. So we can see where we are here. We can see this is a very neutral trade. We have max loss defined on either side. We have positive theta decay, which or else doesn't actually show our positive theta decay. But this might be a way where we could potentially make some money off of a sideways move. Now the shorts are the important part. So this is the 155, 180. Now let's zip over to our chart here. And I use it, you know, I'm flipping back and forth constantly, I know. But part of the reason I do that is because I feel like I have a better analysis by looking at a couple of different places. So if I was to mark on here that 185 level, did I say 185? Or was it 190? What are we looking at? The shorts are at 180 and 155 actually. So that 180 might be a little bit tight for me. I might decide that this 180 level, which is max profit zone, would be, what button am I pushing? There's the 180 and then that 155 level down here. So if I was looking for neutral trades, that might be a time where I might play this. Now, this is interesting. This is showing earnings beat. Surprised by 5 cents. Earnings, so revenue was down. Earnings were up, but the revenue was down. So there's a little bit more cost to do business in that case. That's what I'm reading there. Definitely not a lot of volume under these levels. If you look on on the right here. And this is again why I like to, again, why I like to chart on, TradingView, because when we look back at this recent time frame where this kind of run up has been, there's virtually no volume underneath where it's currently trading. So something to consideration. Morningstar has fair value at 150. Yeah, so thank you for that, AF. Yeah, and these are interesting because these are calculations, right? These are calculations. There's tons of metrics that go into this. So they're always going to have a slightly different fair value calculation based on their weighting of different metrics inside. But basically, they're looking at the revenue and saying, what is the profit per share, and how many shares outstanding are there? That's effectively what we're doing. They're looking at the earnings per share and they're calculating a fair value off of that relative to their earnings and their revenue stream. And that's exactly what we're getting in an earnings report. So why am I feeling like this is going to be a short stream? I've been here for 40 minutes. I'm going to give you guys 2 more minutes. Jump in the chat. Give me a couple tickers. We will pull them up. We'll look at the fair value. I'll give you as much quick analysis that I can. And then we're going to get out of here. I've got a few more trades I want to put on today. I don't know why. I haven't been putting on a ton of trades. I've been putting on really, really high quality trades, but I've been trading with a little less frequency, and that has been fantastic. I mean, I've had an absolutely solid 3 months where we're just killing it. The profit profile is just like perfect line, which is what I want. I want to not have that volatility that we're seeing in the market, but instead I want to just see consistent returns and really kind of look at how that cash flow is building in my accounts. So, and that's why some of the stuff that I'm doing is just way more simplified, and also why I'm going to be making changes to my Patreon. So if you guys aren't members there already, at least go check it out, see what you can get now. Those parameters are going to change. It's going to be a lot more simplified once we get into it. Let me know in the chat if you've got any questions about any other tickers, and then we will take a look here. I see, is anybody talking? No, nothing really here. So yeah, I will bid you adieu. You know, the goal here is to get rich together. So mark it on your calendars. Every Tuesday I do this public stream, and completely free on YouTube. Not financial advice in any way, shape, or form. And if you have any questions that are specifics related to my spreadsheets, you can check out my website. You can go to drawbridgefinance.ca. You can see the website, the items that I have for sale to help you track your trades and analyze your performance and look at all of those different things. I have been a spreadsheet builder for way longer than I care to admit, and I do love it. I've got some pretty trick little things to help us kind of manipulate and chart out some of these more complex things, even though the internet's starting to catch up with me, and we're starting to have so many tools at our fingertips. Unfortunately, everybody's tools are paid. So it's like, I try to add value by having quite a few that I can use, and that are really showing in my performance, which has been fantastic. You guys are amazing. Thanks so much for watching. We will see you next week. I'll see my patrons on Thursday for the members only stream on Thursday. Thanks so much. Let's get rich together. Take care.